The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Mike in Wilmington. Hey, Mike, what's going on?
Hey, Tommy. How you doing, buddy?
I'm doing great, man. Yourself?
Good, pal. Good. I'm calling to give you a compliment because I just want your listeners to know that you are on your game right now. I've been listening to you for a lot of years, Tom, and you are on your game. And I'll tell you, I'll never forget you calling King Dollar back when it was in the 70s. You saying it was going here, and everybody couldn't even believe that it could even dream that it was ever going to go back to the 90s.
I appreciate the feedback, man.
All right, pal.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Always do your best. Practice makes the master. By doing your best over and over, you can master the art of transformation. By doing your best, the habits of misusing your word, taking things personally, or making assumptions will become weaker and less frequent with time. Market-wise, let's take a look at it out here. We have the Dow Industrials down 103, NASDAQ off 42, S&P's down 14, gold contract up $12.30, trading at $1,371 an ounce. Silver up 17 cents. $20.67 an ounce. Platinum up $7, $11.66 an ounce. Light sweet crude down 48 cents, $39.58 a barrel. Bonds. 10-year note down 8 ticks, 132.17. 30-year bond off a full point, 8 ticks, 172.11. Both the 10 and the 30-year, folks, rejected lower price with lighter volume. We'll get our heads wrapped around them. Bonds, notes, they both want higher price, lower yield. King Dollar down 652 ticks, trading at 95.02. The euro is at $1.12, and the yen is at 100.91. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. What do you have? Okay, so you're coming off the highs. What we had out here yesterday is that you failed on price, failed on volume inside the S&P. What we have out here today is you get follow-through. Thus far, we've done 66 million shares. It's taken the swing point out of $215.62, and that characteristic volume there is 84 million. So I suspect we're going to do over the 84 million. What does that set up? That sets up the next leg down. The leg down, because we've been at these highs since the 14th of July, and that's what it's taken out today. The leg down would take it to 210.84. 210.84, folks, is the high of the 24th. That's the high of Brexit. Bottom line, first time down. That'll be hard to break that because the volume is astronomical there. The volume is 333 million. NDX 100. Same setup in the NDX 100. What you have with the NDX 100 is this. NDX 100 had made a high, 22 million shares. You're off that high right now at 17.4 million. That's going to end up doing probably about 30. I suspect it's going to be about, well, we'll see, 28, 29 million. Inside of the composite, we go take a look at the composite. Composite, same type of setup. Composite's down $42. You're going to have an expansion of volume as we come off these highs today. Inside the composite, we've already done 1.6 billion shares, so that's going to be up at the 2.3 billion shares. What we just did have is that Biogen right now shot up $28, and this happened about 10 minutes ago. Bottom line, what that's all about is that the Wall Street Journal reported that Merck and Allergan both are looking to take over Biogen. That's what, if you're wondering what's going on there, that is what you have happening. Gold contract. What do we have with gold? Gold contracts trading at a price of $13.72. You've done 1.5 million contracts. It needs more contracts than that, but it's holding price. So gold can very well go for its highs. We're right next to them right now. That's 1384. If you do go look at the GLD, what you have here is that you're up on air, folks. The GLD's down 6 million shares versus going into 16 million. So bottom line, yeah, you can tap the high out here, but you need more buyers inside that market. Bonds, notes, this is the story out here today, folks. So this is what we have. You look at the note market first. 10-year notes traded to a low today of 132.06. We've done almost 3 million contracts right now. So your benchmark is 1.58 million. So we're not going to do that. So what we did is this. You got the lower price, rejected lower price. Now it wants to go after the last swing high out there, which is 133. You know, we'll see how it handles the 133. Looks to me like this thing's going to go far the highs, which is the 134.07. That's on your 10-year note. You take a look at the 30-year bond, same type of setup. 30-year bond is down a full point. It had been down almost 3 points. We hit a low today of $107.04 ticks. Bottom line, same type of setup. Right now, you're trading at 172.10, and as soon as the 30-year got back inside the 171.25, guess what? It wants the swing point, which is 174, and we'll see whether it can get up to the 177. King dollar. What do we have with King dollar? Good old King dollar is getting toasted and roasted again. Anemic volume, though. So check it out. So you have price destruction. You have volume drying up in an incredible way. We're talking about 20,000 contracts versus going against 66,000. That being said, you're at 95.02, and where this broke topside from on the 24th of June was 93.73, and the probability is that, guess what? That's where it wants to go down to. So that's going to be wild watching this whole thing shake out. If we take a look at the aspect of exactly where we are percentage-wise out here, this is what you have. The Dow Jones is off 0.6%, the S&P 0.7, NASDAQ 0.8. Bottom line, what I expect you're going to see coming into this close out here is that the NASDAQ was down 1.3%. You're going to see more selling in the NASDAQ. There's no doubt that Biogen just saved the NDX 100 as well as the NASDAQ. That is up $30 right now, and the arbitrages will be coming in this in a big way because if you have two separate companies that draw an interest, whether it's a rumor or not, bottom line is that Biogen shares spiked Tuesday after a report by the Journal that Merck and Allergan each have considered to take over the biotech company. Bottom line is that we'll see where this shakes out. But that being said and done, guess what? These Qs want lower price. And they have volume coming off of the highs out here today. And the low of the day out here is 114.22. You're at 114.88. And I expect we're going to at least go after the 114.55 area. So we'll see how it handles that particular area. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. Dow Industrials are down 115. NASDAQ off 46. S&Ps are down 16. Gold's up 12.30. Silver 18 cents. Platinum 7.70. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We have the Dow down 109, Nasdaq off 46, S&P's off 16. As we do each and every Tuesday at 20 past the first hour, we have our man, Mr. Basil Chapman. Don't forget, folks, Basil is a great program right here at TFNN every trading day, 11 to 12 Eastern Standard Time. Now, you can get all the programming at TFNN right on your cell phone. We have live programming Monday, Wednesday, Friday, 8 o'clock in the morning to 5 in the afternoon. Tuesday, Thursday, 7 in the morning to 6 in the afternoon. All of that, get right on your cell phone. You go to TFNN.com, hit Tiger TV, going to get great HD quality audio as well as video. Basil also has a great newsletter. It's the opening call, the way you test drive it. You can do that for 30 days, absolutely free. Come over to our website at TFNN. You'll go to newsletters across the top, hit trading newsletters. You can test drive his opening call right here, right now, 30 days, absolutely free. Basil Chapman, what's going on?
Hi, Tom. How are you?
I'm doing great, man. Yourself?
Very good. Thank you.
Cool. So we're looking at the Dow Industrials here, I believe, right?
Yes, we're looking at the Dow. The Dow right now is down 110. And when we spoke about a week and a half ago, I said that there's a chance that we're at some kind of a crossroad, because we had made a peak C in the Dow, and I was expecting one more high above 18,622. We were also very close in the S&P, SPX.X, there it is, to going to a leg D. We had made that peak C, and we had also looked at the Qs, and I said that here as well we've been rallying up, and I'm expecting a leg D. And let me just briefly say that, let me grab this and move it across here. This particular chart just shows the basic pattern of the Chapman wave and its core process, the schematic, I call it the schematic.
Okay.
And what we're looking at is the price comes down, makes a low, an identifiable lowest low, and then you start counting each successively higher peak, even if it's just 0.01 above the previous peak. You can call it a leg. It stays a leg. It's called a floating letter until it makes a peak. And right now, let's say that you were there and you were in D until you make a peak D, that becomes that floating letter D. But now what's interesting is the only index that did not make the peak D was the Dow. And as I just showed you, look, right here we've got possible peak D in the
QQQ series, that's the Power Shares QQQ Trust series. But look at the way the MACD and the stochastic are holding so well. And one of the reasons why I was waiting to go short, we've been in long positions and they've done very nicely. We've raised the stop on some so that we've taken out with a profit. Now, what's really important about this is that in the Dow, INDU, let me just show you this chart here, in the daily Dow, even though we've pulled back something like, 300 and maybe 370 points, it's taken 9 days. It's really unusual to take 9 days after a top has been made and only go down such a small percentage. So I'm looking at this, and each day I've been thinking that there should be a rally that triggers that D. I'm waiting for that D because, as I say, in the Chapman wave, you get a buy signal that goes to a buy mode. When it gets to that fourth highest peak, other things can happen, but that's kind of where you want to go. Now, I want to show you in the weekly chart, we've made that peak D, but even here, the technicals are still very strong, 93% in the stochastic, and the monthly chart has gone to a leg C, and that's very good. What's interesting is that with 1 day of May already underway, one trading day yesterday, we made a slightly higher high, the 2177.09 high of July, went to 2178.29, even though that's 30 cents, 31 cents. That means that you cannot get a peak in the monthly chart of the S&P until you have to wait all of this month, and then you have to wait for next month before you can confirm that there's a peak. So what I had spoken to you about was being on the cusp. When we looked at the dollar, and I said that I think we're making a leg D and should go to a peak D. We made that fourth highest peak, and we went to that peak D at 97.57 on the 25th of July. Here we have pulled back very sharply. This is a very different chart to the Dow. And in fact, it was just a retracement in the weekly chart. And if you look at gold, I'm going to the continuous contract of gold. Look at this cup formation that's formed. This is what I call an inside buy mode because everything, the technicals are good. It's gone to what I call a gray C. In other words, it isn't, I need a new high above the previous high of 1385, or the high of the 6th of July, before I can confirm that this is really a buy mode rather than a retracement. But you can see even here the technicals are quite good. So this is a very interesting period because we had also spoken about...
So you'd be saying that you have to be over the highs in gold in order to get a buy?
To confirm that it's a buy mode,
okay.
Yes. Yeah, a close over the high. And if you look at the TLT, it had pulled back from an island reversal, pulled back very sharply. We actually were long the TBT, which is twice as long on the... it's the TLT is the bond, the 20-year Lehman 20-year. And that's the bearish, 2 times bearish position. And we have made a peak E in the TLT. It's gone, and we had spoken about this long-term up channel. I call this the Chapman wave inside track, where you often get a repellent from this area. So we have to watch the bonds very closely, even though I'm still in the camp that says that the Japanization of our bond yields is what the Fed is really forced to do. So this is a very mixed market, and I see residual strength, just enough residual strength. Still, even with today's action, I could be completely wrong. It would be so unusual. I don't even recall when I've seen the Dow go to an all-time high and then fail at a peak C to come down very sharply. Usually, at least you get to the D. So I don't want to be sitting on the wrong side of this. We're kind of more in cash than anything else. We have long positions. Before I set up the short positions, I like to see if the Dow can rally a little bit. And if by Thursday we can see the Dow get to maybe 80, it's at 18,305. If by Thursday there could be a rally towards the 18,420, 450 area, I think that'll be a good sign to say, okay, you've used up a lot of time, but not price, and there still could be a rally. But I'm absolutely wrong if by tomorrow or the next day the Dow is trading under 18,200. Then we've already started with those other indices already turning. And I looked at the VIX index. We always look at the VIX very closely. I just showed you the pattern here. I'll show it once again of let me just get this right here. grab it. There it is. So I always look for the lowest low bar, and then I merely count each successively higher peak until you get to the fourth highest peak. And it's very unusual in the VIX index. You'd have to go back, I think, to somewhere in 2015 on the daily chart to see as quick a move that went from, in this case, 11.40 in the volatility index on the 20th of July to today's leg D. And look at that small move. It looks, I mean, percentage-wise, it's, of course, it would be great to be from 1140 to today's high of 1424. 3 points, almost 3 points is a big move in percentage terms. But normally, let me just show you this move. I'll stretch it out. Normally, you take a long time to get to that D, and often it fails at C. And when it does go to a D, it's usually a massive move like this here. Back from the low that was made in January of this year, on the 29th, you went very quickly, peak A, peak B, peak C, peak D, and you went from 19.50 to 30.09. So this is very unusual, and this says to me that the buying intensity is starting to fade, and the buying intensity of the VIX, and as long as it starts to pull back, you should see some buying return to the Dow. So far, I'm just patiently waiting to see if we can get that leg D in the Dow.
And folks, you can come over to our website at TFNN. You go into newsletters, trading newsletters, can test drive the opening call right here, right now, 30 days absolutely free. Basil, thanks so much. Look forward to the show tomorrow.
Thank you very much, Tom. Have a great evening.
Thank you. You stay right there, folks. We're coming right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow right now is down 105. You get the NASDAQ off 45. S&Ps are down 15. If we go inside the Dow Industrials and take a look at the strength versus the weakness, what you have is this. ExxonMobil, which has been a dog in a big way, that is the strength inside the Dow right now, up 0.6%. Procter & Gamble is up 0.5. Travelers is up 0.1, and Coca-Cola is up 2/100ths. Taken away from it on the way down is Pfizer is down 2%. Apple's off 1.4, Goldman's down 1.4, and Verizon's down 1.3. If we do go back over to ExxonMobil, what you're going to see is that ExxonMobil is down from $95. You're at 86. That's from July 15th. You got monster volume down here. This baby's building cars now to get back into the lows that were established out here in February. We're talking about 78 to 74. So it's going to be intriguing watching how this thing shakes out. If we go to Chevron, we take a look at Chevron. Same type of setup inside Chevron. So what you have with Chevron, Chevron is $98, down from the 107 high, has the volume. Both of these are going to have to build some cars to get to lower price. Chevron, we're at 98. That 94.64 is the next level that I expect it wants to go after. We go over and we take a look at the, let's go back over to, it's Biogen. Yeah, Biogen's holding its highs up here. So Biogen went from a price point of $297 to $330 in a heartbeat. And this is on the aspect that bottom line is that Wall Street Journal is reporting that either Allergan or Merck, they're both going to make a run for that company. So we'll see where that does shake out. We go take a look at the small cap. So the IWM. Yesterday, what you had, folks, is this. IWM yesterday had some decent volume. We did 34 million. Now, we've been in the same place in all these indices since the July 12th to July 14th time frame. That being said, you're at $119.61 now. On the IWM, it has to get a close under 118.93. You know, you're coming off the high with volume, but in order to break that whole consolidation we're in, that's the number you're looking for. Versus, and this is the kicker here, which is pretty cool, when you go to the Qs, because the Qs were so sideways, okay, not the Qs, the SPYs rather, so the SPYs. When you go to the SPY was so sideways since the 14th of July, that has broken. And, you know, we're 215.37, bottom line. You stay at this, a bearer 213.30, so 6 cents lower, would basically get it a little bit more bearish. You know, right now, though, we're breaking those swings. It looks like it's going to have the volume. We've done 70 million, but this will do about 20 million in the next half hour. That's kind of just how this shakes out. So, let's see, it's coming into 84 million. It has to do more than 84 million shares. That's the bottom line. You know, also, simultaneously. And if that's what you get, we're going to see that SPY running down to this 210.84 level. And what we do have, which is, this is the last day of window dressing. So window dressing, you know, the first couple of days of the new month, well, this is what we have, folks. And they're certainly not, someone forgot the curtains, evidently. So they're not buying out here. Well, even if they are buying, the selling is overwhelming the buying inside the market out here today. If we go to the XLF, the banking sector, what you have with the banking sector, that is down 26 million shares. That never made its highs, by the way. Okay, when I talk about the highs, I'm just talking about the last 6 months. Never could make the $23.93. Now what you have is that you're coming off these highs, and you do not have an expansion of volume yet. You're going to have lower price. Well, just barely. So 23.67 is your benchmark here, and we're at 23.38. You know, so you're talking 2 pennies. Are those 2 pennies important? Yes, they are. Because then what happens, folks, is you're wiping out all the trading that was done at the highs from the 14th of July in the XLF arena. You're really wiping them out since July. I mean, April 26th. So it's a long period of time. When we do look at the indices, what you're going to see is this. On the NYSE, it's going to do about 850. The NASDAQ composite, and this is the heads up, the composite, folks, is probably going to do about 2.1, 2.2 billion. That is not only the expansion of volume. What you have is that we've been crawling up, and we've been crawling up since the 11th of July. Each and every day, a little bit higher, contraction, 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 and then boom. So in this particular case, you can see the NASDAQ composite has just taken back 4 to 5 days of trading in 5 hours, and that's how downdrafts start. If we go over to the XLE, it looks then, when you start putting this together, it was the XLE that came off the highs first, and that was the first heads up that this thing wants to go lower. What the XLE also did is that it came into its swing. Now, what you're going to have is this. The swing point in the XLE is $64.11. That's the swing low of the 27th of June. We had volume of 21 million. Well, guess what? It came into it with 30 million. This is going to build cause now to try to break down. And if it does break down, you'll see this XLE. So it's $25, not the end of the world, $58. 58 is your next stop on this XLE. What does happen, of course, is that you can get there very quickly when crude just can't handle it. And what you did have with the crude market is this, is that, and this was so tricky too. So picture when you're looking at the crude market. Crude came down, and this is where, it's really unusual that you get psychological levels, but when you get them, and that $40 level is a big psych level inside the crude market. So what happened is that it broke it yesterday, and you broke it with some volume. We went to $39.82. What do? And what that was doing, folks, it was going against the $40.72 that was out there from the swing low of April 18th. Well, you break it with volume, you close above the 40 level. And guess what? See ya, don't want to be ya. It comes right back at you. Fast, furious, all of the above. That downdraft started at 10 o'clock this morning. And now what you have is that you're trading under the $40 level. And what does that do? That sets up just your next flight down. Your next flight down, it's not that that's far away. It's $38.67. Where the problem comes is this. We'll find out if it's going to be a problem. Tomorrow morning, 10:30, oil numbers come out. Saudi Arabia has already brought down their price going to Asia by $1.30 a barrel. That in itself is saying, hey, we get a lot of oil, and what? And we get a high volume swing low out here at $34.69. Market's going to freak if we're going back down to $34.65. It's even a hard disconnect in your head saying that, hey, this is pretty wild, man. We get down to, so watch this. Let's look at this, because this is the commodity, folks, that we use every day across the world. It's amazing that it can trade like this. But guess what? It does. Yeah, so the last low was established at $26 in February. You do a dead cat bounce to 51. 38 is game. 34 is game. Stay right there, folks. We're coming right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. Dow right now is off 104. You get the Nasdaq off 46. S&Ps are down 15. If we go over and we take a look at the yen, folks. Okay, so last night, their morning, our night. Bottom line is that the Japanese government came in with more stimulus, but guess what? Not what the market was looking for, folks. Okay, the bottom line, they didn't put a fortune in it, but they're looking to get the yen weaker versus stronger, and guess what? It didn't deal. We're at 100.86 on the yen, and the spike low from the 24th is 99.02. You know, so. First off, it's going to go after this 100.31, and we'll see where it shakes out. And when we talk about the yen, bottom line, as you come over to our website at TFNN, you're going to see our man, Mr. Steve Rhodes. He is doing a Japanese candle workshop live. This workshop, folks, is going to be August 10th. It's from 5 to 6 o'clock. It's for his subscribers. But guess what? You can be a subscriber right here, right now. There's a special offering that's out there. Normally, Steve's newsletter is $149. You can pay $49. You get the newsletter for a month. You come into the workshop, which is going to be August 10th, 5 to 6. Inside that offering also is that what you're going to get Steve's money management course. That is another additional $149 value. It's a 90-minute course. Now you can check all of that out on the front page of TFNN. Check it out. It's going to be a great course. It's going to be on the aspect of Japanese candles. Let's see. He's going to teach you the most important Japanese, the reversal patterns that are a must, how to identify the market's next move, when to pull the trigger by letting the market commit to you. Bottom line, check it out on the front page of TFNN. We go over and we take a look at the markets out here we have, and there's going to be a lot more numbers coming out after the close. Now, a lot of the big dogs have come out with numbers, meaning in the Index 100. But guess what? There's an additional 1,500 equities that are going to be coming out with numbers this week. So after this close today, there's going to be some action, and no two ways about that. We go take a look at the XLB. Let's get into the XLB. So the XLB, folks, we're talking about the material sector. This is trading at $48.31. Inside the sector, you have DuPont, you have Dow Chemical, Monsanto, Praxair, Newmont Mining, Air Products, Sherwin-Williams. this little baby is at highs. Now, this is really subtle, but check this out. I was looking at this a little bit earlier today. Okay, so this has been trading since April 27th at these highs. You know, we're at 48.31. It's at 47.88 is really the highs of that. But what you have out here today, and this is going to be wild watching how this thing shakes out. We made a high 5 days ago at $49.18, and you made that high with 4.2 million shares. Now, what do we do today? You're only down 10 cents. You have a price spread from 48.52 to 47.97. But guess what? You get a big expansion of volume. That is saying this sector right here is going to start a pullback. Also, what you have is that from the Brexit deal, we came off of $48.14, and you came down hard to 44.22. So what we have down there is we're laying out a high volume swing low. And then right on top of that, it's really not in the lower range yet. In order to get in the lower range, and there's three separate highs, I would say that in order to get in that lower range, you really have to get inside 48.18. You can make the case that it's inside of right now at the 48.60 because of the fact that that was the high that was generated on the 8th of June. I'd just be, if you stay conservative inside the context of it, when you look at these three separate highs, and what we're talking about, folks, is trading ranges, because ranges are pretty cool, because once equities get outside a range and are inside that range, they like trading there for a while, you know, and how you move back either inside the range or outside a range is important. In this particular case, this is bearish, because what's happened is that you've taken out all the trading since July 14th, and you have an expansion of volume. So what that's saying is that, guess what? You have sellers in the market. You took out the consolidation that's been going sideways, and that consolidation is distribution in a big way. In fact, you know, so this is a pretty good heads up. And there's quite a bit of that out here today, by the way, from the 14th of July coming over to today. And many times what ends up happening is that when you just lay at highs like this and you don't have movement, it's like, okay, why can't you bust higher, or why can't you bust lower? You can make the calls on both sides. After a huge updraft like we have had, however, bottom line, that makes a big difference. Meaning it's releasing information to you. Let's go over, thanks Terry, appreciate it. Let's go over to the semiconductor index, the SOXX. Yeah, this is coming off the highs of volume too. So let me pull this back a bit. We're down $1.64. This is at 102.44. Look at this. This thing broke topside with volume too. So this would be really intriguing, because if this is a failure, this would really be pretty wild. Okay, so this is, well, watch, you want to see something that this could be really diabolical, folks, and this is what it is. The semiconductor index, you had a high that was established in June of this year, $101.80. You do volume of 10.3 million. Well, you get over that with 11.7 million. And if you get a failure like that, and you know, right now we are back, no, you're not back inside the range yet, but if you get back inside that range, that is saying, guess what? You not only had the breakout and you had the volume behind the move, and then it failed, it's like, oh man, okay, so then it would try to go take out the $88. You know, you get 88 to 72, which is the low when we came down August of last year. And this would probably just have to do with, guess what? Everyone's in that's in, because this has been quite a run. I mean, it ran from $47 in 2012 straight up to 101, last August, went down to 72, and bottom line, it broke out topside once again. So if you do have, what I always like about something like this is that has been one of the strongest indices. It broke topside, had the price, had the volume, and if you get a failure there, what is that telling you about the rest of the sectors? It's a divergent way of kind of looking at the market, but it's pretty cool because if the sector that's been the strongest does break with volume and fails, the rest of them, see you later, man. See ya, don't want to be ya. Our phone number is 877-927-6648. Don't forget, folks, of course, after my program today at 5, we got our man, Mr. Andy Heck, coming up, too. Every Tuesday or Thursday, the commodity hour with our man, Mr. Andy Heck. You stay right there. We got another 10 minutes before the close. Dow right now is down 92. Nasdaq's up 43. S&P's are down 13. We're going to be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Let's go over to the XRT. Thanks, Duffy. This is pretty intense. Now, this is the Spider Retail ETF. This little baby, another one coming off the highs, big volume, with $48.80. Just came down $1.13. You know, you made highs last week at 5.5 million. You get 7.3 on the way down. Bottom line, this is going to go after June 27th. High or low, still $41. Inside of this, so the retail sector, inside of this, what you have the Gap, Outer Wall, Finish Line, Dick's Sporting Goods, Burlington Stores, JCPenney, Sears Holding, dog, big time. The car companies, they're getting hit in a big way. You have Ford right now down 53 cents. That's trading at 11.94. That is breaking, it's breaking a swing point with volume. It broke 12 bucks. It's done 93 million shares. The swing point had 52. So that is going after your February swing lows of 11.02. Now, the more equities and sectors that break down, folks, the higher the probability goes that, guess what? That's where we're going. And this is a neat exercise in the aspect of how this works, meaning price and volume. If we go over to GM, we take a look at General Motors, same setup on GM. GM's down $1.30 today, 22 million shares. Bottom line, it's going to make a run down to 28.10. And it's not like they've sold less amount of cars, and they think that the peak may have been last year in the aspect of how many cars sold, and it's hundreds of thousands, probably millions. Bottom line, that on a fundamental basis makes sense, because what you have is that you got to remember the crash was 2007, 2008. We're in 2016. There was plenty of time that people couldn't, bring their car in because, the cash flow wasn't there. Well, it's 9 years later now. So I suspect the last 3 or 4 years, people have turned their cars in, bought the car. And what has happened now, which is pretty cool, is that, cars last for a long period of time, man. That's what it comes down to. So, 200,000 miles is not a big deal on a car. It's not. So these cars are going to last for a while. So we'll see where that shakes out. But bottom line, that sector also going south. So let's go over to the transports. We take a look at the transports, because the airlines have been going south for quite a while. Transports today are down $1.68. They never got to a high. The high that was trying to go after was 81.49. The highest it got was 8,048. This is really cool. Okay, so check this out. So one of the benchmarks out here that is, as we go down, I suspect we're going down. So as we go down, it's going to be hard to break the highs of June 24th. The reason I'm saying that, folks, is that when the market came down, it came down so fast and furious that the highs of the lows normally give you some support. Guess what? The transports are right into that today. The high of the transports on the 24th is 7,652. Well, we're at 7,647. It's into it. So tomorrow, we want to be all over watching these transports, because if these transports just get in, that's not enough to really do a probability saying it's going to go to the bottom of it, because right now we're only into that by 5 points. You get down another 10 points into that bar, though, guess what? It's curtains. It would break the swing points, then it puts game down to 7,029. And of course, what that does in the context of where we are, that sets up that the S&Ps also want to go down to not only the June 24th levels, they want to get down to the February levels. Dow Industrial's down 92, Nasdaq off 46, S&P's off 13. You stay right there. We're going to be coming back after 4 o'clock with a lot of numbers for you, folks.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Dell in Texas. Hey, Dell, what's going on?
Hey, Tom.
How you doing, man?
My call. Great.
Thanks for calling. Thanks for holding. Appreciate it.
I love your show. I just stumbled upon it probably, maybe a month ago.
And how'd you find us?
I found you on YouTube.
YouTube. That's a beautiful thing. Well, we appreciate you growling and prowling with us. Welcome to the Tiger family, man.
Wow.
I like it. Totally.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, Whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. It's making a great night. Great August. Pretty hard to believe. Release the need to be right. When you believe something, you assume you're right. You may even destroy relationships in order to defend your position. Let go of the need to defend your position. Market-wise, let's take a look at it out here. We had the Dow Industrials down 90, NASDAQ off 46, S&P's down 12, gold contract up $12.10, trading at $1,371 an ounce. Silver up 16 cents, $20.66 an ounce. Platinum up $7, $20.66 an ounce. Light sweet crude down 40 cents at $39.65 a barrel. Bottom line, folks, oil wants lower price, which is going to continue to basically put a beating on the S&P. 10-year note down 10 ticks, 132.15. Now, what you have with the 10-year note as well as the 30-year bond, that was down a point and a half, 172.03. They actually rejected lower price, had lighter volume. In both cases, the 10-year was almost down a full point. The 30-year was almost down 3 points. King dollar down 657 ticks at 95.02. The euro is trading at $1.12, and the yen is at 100.91. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. What do you have? What we had out here yesterday, folks, is that you had, if I go, we'll look at the cash first so you can see this correlation. Yesterday, you had a failure on price, failure on volume, subtle, but bottom line was this failure. We had been going sideways in this market since the 14th of July. And what a failure specifically means is that we had got over a swing point, got over it on lighter volume, closed underneath it, and that's how the cash was, S&P was riding out yesterday. We went to 2178. We closed at 2170. Bottom line, we go to the SPY. Now what do you have? You have follow through coming downtown, and this is what it is. We did 89 million shares. You're 215.54. This is 215. Yeah, they closed it. There's the big volume. So 215.62 is the first number. You know, so you got below that number one. So now what I suspect you're going to see is that we'll get a little more steam coming up, and this is going to go after the $210 level. $210.84. That level is the highs of June 24th. Inside the NDX 100, what do you have? NDX 100 comes down with 20 million shares today. Then that is with Biogen shooting up $30 intraday. Still couldn't save the NDX 100. You know, we'll see what type of fall through we get coming into the $113 level, because that's where it looks like it wants to go, to $113.65. Gold contract, what do we have with gold? Gold contract is staying at highs. Bottom line, no volume. We don't have the volume up here, but, you know, you're at a higher price. You're up $11.90. You're at $13.71, and that says, hey, $13.84 is game. You know, we'll see whether it's going to do it. My take is that, well, hey, listen, it closed at higher highs. It can do it. The juice is not behind the move. If you take a look at the GLD, and this is where the deviance comes in the whole metal market right now. The GLD only had 7.5 million shares today, and they're going against 17 million. That is not how you want to make highs, folks. We're right next to the high, but to me it looks like it's just going to be a test of that high. Bonds. What do we have with the bond market? Bond markets continue to reject lower price. And the rejection out here was pretty intense today, because what we had at the open out here this morning, they were smoking bonds, folks. We had the 10-year down to 132.06, ends up closing at 132.16. We did 1.3 million contracts. That was going against 1.5 million. So bottom line, bonds are going to make another run topside. That correlation inside the marketplace is that, guess what? Bonds go topside. That is saying more than likely we're going to see more selling inside the S&P. And the amount of retracement in bonds is just minimal. It's like a joke, actually. It's a mind blower. 30-year bond, we did 278,000 contracts today. That was going against 313,000. Same type of setup. Bottom line is that this thing, 30 years, also want to get to higher price. If we go overseas and we take a look at the markets overseas, we did really well compared to overseas. Our Dow was down 0.4%, NASDAQ was down 0.9, S&Ps were down 0.6. The FTSE was down 0.7, the DAX was off 1.8. Bottom line, and that was a follow-through from lower prices on Monday. King dollar. What do we have with King dollar? This is the tough one, folks. King dollar trading down 647 ticks. You're at 95.03. You are down there with dramatically lighter volume. But bottom line is that you broke the swing point from 2 days ago, which is 95.33. So that sets up that King dollar wants to go back to where June 24th it took off from. Now, it's pulling back with lighter volume, and that may be the consolidation that we're in for a while. You know, it couldn't hold price today, so we'll see how that shakes out down there. The divergence out here this morning was pretty intense, meaning that you had the bonds dramatically lower, and King dollar is dramatically lower. And of course, when bonds are lower, that means yields are higher, which should put strength into King dollar. But you do get those divergences, you know, many times inside the marketplace. Let's go over and we take a look at the silver contract. What we had with silver is this. Silver contract trading at $20.66. You've done 62,000 contracts. And that looks like the last swing out here, 2083 we did. Hey, the 21-22 is game. That's how this is shaking out. It's going to, you know, we did 173,000 contracts, which that was on January 5th. But it looks to me that, yeah, that wants to go up and try to get into that level. The gold and silver equities, though, bottom line is that there's quite a few not quite failures out there today, but what you did do is that some of them were going into higher price, couldn't handle it, backed off. Others were going into the aspect of testing their highs, and they also backed off. We go take a look at the euro. What we have with the euro is this. Euro right now is trading at a price point of 112. And, you know, we'll see whether that can make it up to where the Brexit vote started. The Brexit vote being up at the 114.28. What we did have out here today, as you went to lower price, on the NYSE, you had 942 million shares versus 854. So you got the expansion of volume. Inside the NASDAQ, also got it. 2.1 versus 1.8. And what does that set up? That sets up lower prices are coming at us, folks, right here, right now. You stay right there, folks. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A share bull and bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We had the Dow finish down 90, NASDAQ off 46, S&P's off 11. As we do each and every Tuesday at 20 past the second hour, we have our man, Mr. Andy Heck. And don't forget, folks, every Tuesday, Thursday, Andy's got an outstanding show right here at TFNN. The Technomental Commodity Hour also has a great newsletter. Same name, well, Technomental Commodity Report. You can come over to our website, test drive it 30 days absolutely free. The way you do that, go to TFNN. Go to newsletters, go to trading newsletters. You can test drive it 30 days absolutely free. And of course, don't forget, as if you're on the East Coast driving right now in your car, on the West Coast, middle of the country, Florida, wherever you are, remember that right on your cell phone, folks, TFNN.com, hit Tiger TV. You can get all our programming right on that. Andy's going to be coming up at 5 o'clock tonight. Andy Heck, what's going on?
Hey, Tommy, how are you?
I'm doing great, man. Yourself?
I'm doing good.
Yeah.
Doing good. Interesting markets. Got a lot to cover today.
That's a beautiful thing.
A lot going on. You know, the first thing, I start with stocks. You know, very interesting. So we're in August, right?
Yeah.
I can't believe it's August already.
Isn't that intense?
The year goes so fast,
Oh,
right?
man, scary.
And every year seems to go faster.
It does.
That's the scary
Sad
part.
but true.
So you have the stock market, which is up there, right?
Yep.
You got crude oil, which is coming down.
Right.
And today's the first day that the XLE kind of showed some weakness.
Yeah.
Crude oil going down is bearish for the stock market. Now, precious metals continue to make higher highs and higher lows. Platinum made a new high today.
Yes.
Gold made a bullish key reversal last week. I mean, what are we, $6 off the recent highs?
Right.
Silver's up at above $20.50 an ounce. So I think that you're getting bearish signals for the stock market from both crude oil, because there are so many companies in the stock market that depend on crude oil.
Sure.
And from precious metals, which is kind of flashing a warning sign to stocks. And you have October coming just around the corner. And we all know that, the fall season tends to...
season.
Well, hurricane for the stock market, maybe.
Yeah.
I mean, there are a lot of precedents for stock market weakness in October, and we have a presidential election in November, a contentious one. So it could be a very rocky road in September, October, and November for stock prices.
Hey, that's what it looks like. I mean, bottom line is that we came off those highs with volume today, so we'll see whether we follow through tomorrow, but that's what it looks like, man.
Exactly. Now, as far as crude is concerned, there's one thing in crude that's making me feel like we are getting close to a bottom here.
Okay.
And that's action in the gasoline crack spread, which
Okay.
has moved from $11.70 a barrel on July the 20th. You know, I've been bearish for the last, I guess, month and a half or so on crude when we've been talking, because I've been pointing out that product prices are just weak, very weak.
Yeah.
So what we're seeing now is a little bit of strength. We're seeing the crack spread go up from $11.70 to over $15 today, which means that gasoline is outperforming the crude oil.
Yeah.
And as you know, consumers don't buy raw crude oil in barrels. They fill up their cars with gasoline. They heat their homes with heating oil and
So,
travel
Andy,
on.
when what we're talking about, folks, is the crack spread, and just, as Andy said, none of us buy a barrel of oil. I mean, you have to, crack it and get it down for usable products. So when oil does go to lower prices like this, do these, like terrestrials of the world, when they're cracking that, do they have a chance to make more money when it's at lower prices? How does that work?
It all depends on what the crack spread does.
That's it. I got it. Okay.
Right.
Okay, I see.
There have
Right.
been times where crude's been going down and the crack spreads have been going down. It's been a
Okay.
double whammy for the
I
oil
see.
industry. But, we also saw when crude oil prices dropped from 107 down to like 38 the first time.
Yeah.
Crack spreads exploded from like, $15 up to $30. And that was a signal that crude oil had reached a bottom. Now, I'm keeping
Okay.
my eye on this gasoline crack spread here, because if it keeps going above 15, we could be very close. Look, we got big technical support in crude at 38.50.
This is pretty cool, man, because as we're doing this, Mr. Duffy is saying this crack spread leading indicator for oil. It kind of looks like it is, huh? Because I just put up Valero, and it looks like Valero's coming off this bottom pretty nice.
Right. It could be. I mean, it is
Yeah.
at times. It's something.
Yeah, no,
listen,
I'm with you.
it's-
I know.
it's-
Listen, I know we're in the probability business.
Crude
Yeah, right.
oil. Think of crude oil as a giant jigsaw puzzle, right?
Yep, right.
Crack spread is one piece, but it's a piece close to the center. It's an important piece.
Okay.
But you also have term structure,
Yeah.
which is the contango, which has been widening, so that's not good. That's
Okay.
an indication of supply and demand. You also have the processing spreads, you have location spreads, the difference between Brent and WTI. So there's much more in there
And
than
then,
just
and then
one
you
factor.
got like Saudi Arabia. They just went down all their oil Sunday night because they're having a fight with Iran as to who's going to sell the most oil in Asia, right?
Right. Then you have politics,
Yeah.
which is always, at the center of all of this stuff. But, I think the move in the crack spread, in the gasoline crack spread, has been significant. I would like to see it accompanied by a move in the heating oil crack spread.
Okay.
Because heating oil, we have to remember, gasoline's highly seasonal, Tom.
Yeah.
We're in the height of driving season now,
Right.
summer vacation. Heating oil is less seasonal. The name, the nomenclature, heating oil makes you think, hey, this market tends to peak in the winter. But heating oil is an excellent proxy for diesel fuel, which brings products to market. So heating oil is more of a year-round oil product. There's always demand for it. So we're seeing, it kind of stable here. I'd like to see it get up to $15 a barrel. That would tell me, that would be a signal for me to give a try of oil on the long side here. But I haven't stepped in front of that freight train yet.
Well, you bring up a great point about this diesel because the airlines have been getting hammered, man.
Well, that's
So-
jet fuel. All right, so that's jet fuel.
Oh, and that's
another
different?
one. Yes,
That's different too.
But
Okay.
it doesn't trade. I can't put up a chart of it.
No, I
but
understand
I will
that,
tell
but I thought you could look at diesel for that, but you can't. Okay, I see.
You can't.
Okay.
But the jet fuel crack has been very, very weak in the physical market. And why is that? That's because people are not traveling to Europe this summer from the United States. People are scared. The U.S. State Department issued a warning, a terrorist warning, and we've already seen a number of attacks in Germany and in France. They broke one up last week. So people are scared to go, and that's affecting airline revenues. People are traveling less by air, and that is also weighing on oil prices here.
Yeah, I mean, because they're in the air quite a bit, so that's a lot of gasoline or diesel or whatever they're using, right?
Absolutely. So let's look at a couple of other markets. Let's look at natural gas really quickly here.
Yeah, well, and actually, can we just stay? We'll just stay with oil for a second because
Sure.
10:30 tomorrow morning we get the oil numbers out, and the API numbers are going to be out in a little bit now, huh?
API numbers come out now. The market, is in bear mode. They are expecting inventory increases. So that'll give us some short-term direction. But we got to remember, inventories are very high in oil. They've remained high all throughout this bear market that we've seen. So, even the other thing that's interesting, Tom, the number of rigs in operation have increased recently, and the rigs that they're putting out there are a lot different than the rigs that we've seen over past years. You used to dig vertically. Now these horizontal rigs can drill 30 wells at a time.
Oh, my God. Stay right there, all right?
Sure.
You stay right there, folks. Andy Heck, myself, we're coming right back. Dow finished down 90, NASDAQ off 46, S&P's off 11. We're going to be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We're talking to our man, Mr. Andy Heck. We are talking commodities, and of course, don't forget, coming up 5 to 6 o'clock right here every Tuesday, Thursday, tonight. We got our man, Mr. Andy Heck. Great show. Right on your cell phone, folks. Go to TFNN.com, hit Tiger TV. You're going to get some amazing HD quality video as well as audio. Yeah, so natural gas.
Right. You know what I was going to say to you, Tom? You know what I love about these commodities? You could spend a whole show talking about just one of them.
Oh, I know, man.
It's like, you know, this. It's like incredible. But taking a look at natural gas, looks like it failed again. Made an attempt to go up to $3, but I wouldn't be too sure. I wouldn't get too bearish here on natural gas. You know, injections this year are 41% below where they were last year. Yeah. You also have natural gas is feeling the burn. You know what I mean? I mean, the Bernie Sanders in his platform was very anti-fracking.
Okay.
And, you know, Hillary Clinton has adopted some of those positions.
Okay.
And we could have some more regulation, particularly on fracking. And that would be positive for the natural gas price.
Okay.
So, you know, there's a little politics seeping in over there as well. But couldn't get back to even close to $3. So we're coming off a little bit here, but don't get too bearish. You know, the thing is in a range.
Well, I think that's great. I mean, we got a range now of $2 to almost $2.90, right? I mean, it's $2.
Well, yeah, I mean, but over the last, let's see, over the last
5 months.
I'm just looking since June. We're really trading 250 to 3, which is still a nice range.
Yeah. Yeah.
Still a nice range, yeah. I mean, but open interest is dried up here. Volume is down, other than, you know, a big spike last week when we had the EIA reports. Look for the action around the EIA reports. If they continue, if natural gas continues to dribble out instead of pour out,
yeah,
that's going to be positive. You know, that's certainly it's commodity economics there.
Yes.
So let's turn to precious metals, because that is the bull of bulls.
Yeah.
I mean, I don't care what you're looking at, gold, silver, platinum, palladium, they are all rocking and rolling. The dollar coming down today is helpful. But even when the dollar was strong, these things have been strong. You know, these are just waving the fear flags out there in markets, which they should be. And I think it's particularly interesting for the stock market with oil going down and precious metals going up. That's a lot of pressure for stocks, in my opinion.
Yeah, you know, I'm on a different side on that. And this is what it is, that it seems that when I'm looking at the equities themselves, right, they don't seem to have enough juice, you know, to sustain higher price. And I've seen the gold and silver equities trade too many times with the broad market, you know. And what normally happens is that, yes, over the course of, let's say the course of a couple of years, right? Let's say we get a correction, right?
Yeah.
That what you'd see is that the metals will come down, the gold and silver equities will come down, but the S&P equities and the NASDAQ will go much lower. And so then the next leg up, what will end up happening is that, yes, the metals will be higher, because I think we're in a great bull, there's no doubt.
Right.
And then the market itself may stay where it's at. Do you know what I mean?
Oh, I don't disagree with you.
And what happens here, just what happens, folks, which is pretty cool, that's what the bond market has done since 1981. It's like so weird. Do you know what I mean?
Yes, absolutely.
Yeah, so.
Absolutely. You know, let me give you some numbers here that you'll find interesting.
Yeah.
And this will kind of go to what you're saying, and I don't disagree. Listen, precious metals have moved crazy. No question. Big up moves here. A 50% retracement on the move of gold would bring it down, and that's just from the beginning of the year.
Yeah.
Would bring gold down to 12.12. That's $160 below here. So gold's got a lot of room for correction. Silver, the number is, I wrote these down for my show. Let me just let you know where those are. The number is 1737. In platinum, the number is, let's see, 1,000. And in palladium, the number is 588.
Okay.
So you could have massive corrections in these markets, and they could still be in bull mode.
Yeah.
So, you know, that's exactly what I'm saying. Higher lows, higher highs.
Right.
That's what we're looking at. You can't buy highs in precious metals. You got to buy the dips, but you got to hold your nose when you do it, because when you're going to be buying them, they're going to look mighty ugly.
Yeah, I know, man. It's wicked.
But you got to use periods like this to take profits. It's fine to keep a small core long position, but you have to trade around it, and you have to, you know, when we go up to 1,400, if we get there, you know, you got to be a scale up seller here, starting
That's right,
here.
because what Andy's talking about, folks, if 1428's the number, that's the swing high that this thing has been trying to get to. You know, that's the reality out here. So.
And by the way, I think we're going through that number eventually.
Oh, I do too, man.
I think we're absolutely going through that number.
If you actually look, folks, if you're a long-term, you know, deal here in general, all we did, you know, that vicious correction, well, more than the correction from 2011 to 2015, that was a 15% downdraft of the whole move up. So the market's not done, you know.
Right.
And
the market is not. Oh,
right.
This market might not have really begun yet.
Listen. There's no doubt, because I can't figure out how they're going to get out of this low interest deal. Now
they're not.
That being said, folks, what did happen in Japan the last 3 nights is that their bond market imploded.
Right.
I mean, if you want to see, let me see if I get this chart. This chart is like, I was just looking at
JGBs.
Oh my God.
Japanese government bonds. Yeah.
Yeah.
Oh yeah.
it's like it's. Let me just see.
I mean, you know, the way out of it eventually, Tom, is when the inflation, you know, the Fed's looking for a 2% target. It's when it starts jacking to 5, 7, 8, 9, 10%, and that's when we'll be out of it, because that's when they're just going to have to start jacking rates.
Right.
That's when we come out of it.
So if you're watching Tiger TV, folks, I just put it up. I just put the chart up, okay? And what you're going to see is that in 3 days, the bond market in Japan took everyone's money that ever bought a bond from February 24th.
Right. And that'll happen in the U.S. bond market too, but not yet.
Yeah.
Not yet.
Pretty intense.
I want to change the topic for a minute.
Cool.
I want to talk about one of your favorite topics, which is, as a carnivore, the meat markets.
Ooh.
I want to point a little something out here. You know that cattle has been under pressure.
Yeah.
And lately the hogs have been under pressure. But I'm looking at the cattle, the beef pork spread.
Okay.
And you could see that it traded down to like about 1.4 pounds of pork in each pound of beef value back in, back in June, which is the long-term norm. Now we're moving back, and we are back up to 1.9 to 1. That means that steak is getting expensive relative to pork again, and that's because pork prices are coming down.
Wow.
So that could be an interesting trade. I'd look for over 2 to 1 to start getting maybe short a little cattle and long a little hog on spread. That worked nicely for us last October and November. We're coming back to that time of the year. So that's something that I've been noticing. You know, I love to look at these inter-commodity spreads.
Oh, big time. And the I wonder, you know, I guess there's been great weather in certain parts of the country, but then it's been pretty hot in a couple other parts. So it's going to get intriguing, you know, as we come into these next couple weeks in August, right?
Yeah, the water is warming up in the Gulf Coast, isn't it?
Oh, we're warm. This is
that sets it up for some big storms.
No, yeah, we're warm. They come out with the numbers today. This has been the hottest that's been in Tampa, I guess, for quite a while. Well, listen, man, thank you so much. We look forward to the program at 5 o'clock.
Thanks a lot, Tom.
Awesome, man. Stay right there, folks. I'm coming right back. Andy's coming right back at 5 o'clock.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. Let's go over to FIT. This is Fitbit. That closed at $13.16. Right now, that is trading at $13.92. It had been down 50 cents today, so it's taken that back. This stock has been one big mess. You talk about pushing equity out to the public and taking them to the cleaners. So this equity went public. Let's see what. Okay, so it goes public at. This is pretty amazing. It goes public at $20, June 17th, 2 years ago. No, 1 year ago. Oh my God, 1 year ago. June 17th goes public at $20, 42 million shares. It goes up to $29, and they push out another 19 million shares. And then guess what? Let's look at this. One-way trip. Stock, yep, they pushed up. In July, it was at $48. By August, it was at $51. That's when they pushed the rest of the stock out. It goes from $51 straight down to $11.91. So let's see what they're saying right now. This is what you got. Their gross margin is 42%. Their earnings per share was 11 cents. They planned on making 12. Revenue was $578 million. They made $586 million. So bottom line is that, yeah, they're finally doing something. It's pretty amazing, actually. So you get a market cap of oh my God, that doesn't even seem right. Yeah, they got a market cap of $2.8 billion. They're taking in, they're taking in a lot of money. So I guess people are wearing these Fitbits. I don't know when they'll start making some money, but expansion-wise, this is what you have. In 2014, they took in $745 million. In 2015, $1.9 billion. 2016, $2.6 billion. So maybe they got a planned, and that actually is going to fly. Let's go over to Electronic Arts. That closed at $76.78. This, of course, is the game maker in an extraordinary way, too. This is trading right now at $76. Let's see what they have to say. Okay, so first quarter, they had a loss of 2 cents. They expected to make 7, so that's not great. Revenue, second quarter revenue, they expected $1.1 billion. They're going to take in $1.08 billion. It's saying here that they actually beat on revenue, but I don't see that. Yeah. I see that non-GAAP revenue is $1.08 billion. They took in 1.1. We take a look at this, how this equity has been set up. You're at highs, you're over highs. It's the bottom line. So this is almost like a little Teflon stock here right now. OMEX. Now this one's really intriguing. You know, this one hasn't been around for a long time. This is Odyssey Marine Exploration. This was up $1.43 today. If you remember, a couple times I actually had the CEO of Odyssey on. This is years ago. They're right in Tampa. In fact, my son and I got caught in Katrina, and we were down there doing business because it was Odyssey Marine Day in New Orleans when Hurricane Katrina struck. Yeah. But they get something going because this has been an equity that has been getting killed for a long period of time. They actually had to change their business plan because the business plan was basically getting shipwrecks, and every shipwreck that they actually found, what ended up happening is that the governments went after them, and they lost many of those court cases. So they found the gold, they found the silver, but guess what? Didn't get to keep it. So now they've changed the business plan, and evidently whatever happened today is helping them. We go over to Hanes Brands. Hanes Brands closed at $25.65. That is trading at $24 right now. And numbers go like this. The estimate was 52 cents. They made 51. The estimate for gross sales was $1.53 billion. They took in $1.47. This is going after a swing low. Oh, yeah. Evidently, we're not buying T-shirts anymore off Hanes or anything off Hanes. So Hanes looks like it's going to actually break down into 23 bucks. You break 23 bucks, and this thing can get to $18. And what you do have here, XRT. If you go over to the XRT, you're going to see this is the retail spider. This thing got toasted and roasted today. Came down with volume, 7.9 million shares, and you're trading at 43. That thing's on its way to 41. QRVO. This, let's take a look at this. This is, they design, manufacture high-performance analog mixed-signal integrated circuits. This closed at $61.45. That is trading at $58.50. Let's see what we got. Yeah, so this was just going up to ice and couldn't handle it. Yeah, you're going to be right back inside the lower trading range. Let's see what they have to say. Okay, so the earnings per share was $1.08. The estimate was $1.06, so they made that. Revenue estimate was $650. They made $697. So they made both numbers, but guess what? Market's not digging it. And as our man, Mr. Dave White, is informing me, this is an Apple supplier. It hasn't hit Apple yet. Apple is down $1.50 today. We're at $104. And all that Apple has actually done too, folks, okay, is get up to where it gapped down from April 26th. So if we bring Apple back, this is pretty deviant of what it's done. On a weekly basis, $105.65. You can't hold that. Yeah, this is going to be pretty cool. This is the test this week. So, Apple. Apple, the last time it came out with its numbers was in April. It went from 105 bucks down to 92. You did that with 349 million shares. So a test of that means what? Test it means you go up to that high, you either make it or break it. In this case, what Apple has done thus far is that it got over that high, and it did it yesterday, it did it today. It's under that high right now. It's $105.65. And if you close under that high at the end of this week, that is another failure. And what you have also happening here is that the supply line is just so big at this area, because the supply line at that level, meaning 105 level, is that all the way back, anyone and everyone that bought Apple from October of 2014 is still in a losing position. So that's what supply lines are all about. You know, you're coming up to that, people just want to break even. And what happens with an older supply line, by the way, right, you actually get a little bit more selling. The reason being is that the first time up to a supply line, it's, you know, people want to get all their money back. After a couple of years, they feel like whatever they're getting back is pretty cool. You stay right there, folks. We'll come right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
Join Andy Hecht as he shows you how to make money in commodities. The Commodities Hour, next on TFNN.
Welcome back, folks. Let's go to Scott in Boston. Hey, Scott, what's going on?
Hey, Tom.
Hi.
Oh, having a great time.
That's a beautiful thing, man. Thanks for calling. Thanks for holding.
Yeah, first-time caller.
Well, I appreciate it. How long you been out here growling and prowling with us?
A couple of years.
Thank you so much, man. We appreciate it. So,
Yeah, I was interested in Nugget.
let's take a look. So, Nugget, I'm sorry, go ahead.
I was looking at the volume over compared to like a year and a half ago.
Okay, so let's take a look at it. Nugget, folks, is the direction gold miners bull 3 times the New York ARCA Gold Miners Index, okay? So this is at highs today. You know, got to a price point of 177, closed at 172. Now, do you own this? You're looking to buy it? What are we doing?
Yes. No, I own it.
Okay. So what happens, folks, is that this vehicle, this is a leverage product, and Direction lets you know that they're daily investment vehicles. They're great vehicles. Bottom line is that they compound price on the way up, and they get defensive on the way down. You know, that being said, Scott, if we go over to the HUI, okay, which the HUI, that is what it trades off of, okay, that's New York ARCA Index, okay, and we put this up, what you're going to see is that, you know, this has been quite a run, but the volume is dying on the vine here. You know, what we've done is this. Now, I don't get the volume until like 8 o'clock tonight on the HUI because it's a compilation of how the stocks trade inside it. That being said, we needed like 32 million shares. And like yesterday, You were going higher at 16 million. So I'd take some money here. That's what I'd do. You know, you get a great run. The NUGT, the GLD, the HUI, the XAU, the run is extended. That's my take on it. You know, we'll see where this shakes out. But you can take the money, put it in your pocket, bring your wife to the Four Seasons, and wait for a pullback and do it again.
What I was looking at is the volume over like a year and a half ago.
Well,
on a 2-year chart.
Oh yeah, it's awesome, man. There's no doubt. That's the same. The whole gold run is extraordinary right now. Yeah, it absolutely is. You know, but
it looks like the volume's twice what it was coming down.
Oh, it is. Oh, it absolutely is, and that's right across the board. What he's looking at, folks, is that Nugget was $20 in January. It's 172 now. Monster volume. If we take a look at if I bring the HUI up for you, can bring individual stocks. That's when Andy and I were talking a little bit earlier, Scott, right? This is a true bull run in the metals complex. And if we put this up, and watch, I'll put this up on a 10-year, and I got the HUI in it, you're also going to see the volume's explosive in the HUI, you know? So that is saying that we're going to go to higher prices. What I'm saying is that before we go to higher prices, we're going to get a pullback. And you don't want to be in a pullback inside the Nugget, because the Nugget, because it's a leveraged product, you just made a nice score. Bottom line, you know, put a stop in, take some money. Where the problem comes in on the Nugget, not the Nugget, all of these, I suspect what you're actually going to see tomorrow morning is that if you get a gap down, get out of this thing so fast you can't see straight. Because what has happened today, folks, is this, is that these little island tops could have got placed today inside the metals market. There's not a confirmation yet, Scott, because what would happen is this. You're up $5.92 today, okay? If you open down $5, though, that's an island top, man. It's an island top with light volume, and that's a problem, man.
Right.
Hey, count them. You're in the market to take some money. Take some money, honey. Have a great one, man. Have a safe one. You stay right there, folks. Thanks, man. You stay right there, man. Mr. Andy Heck's going to be coming up and growling and prowling with you, folks, all about commodities. A beautiful thing. Look forward to speaking to you tomorrow morning, folks.